Hi guys, Harry Yodis here. I've been a professional trader for 20 years now. Started in 2005 working for a national bank here in Canada, and for the past 10 years I've been trading my own account. So the big news of the day, we're looking at a picture of the S&P 500 here, but the big news of the day, even though it's been a very quiet day, silver squeeze. Global resource war is on. We've been talking about the global resource war for months now, all of 2025 actually. And it's getting more and more exacerbated by the day, it seems. Okay, but first, let's talk about a picture of the S&P 500. We always talk about the market first because it's important. The technical picture comes first, and this is Friday, December 26th, Boxing Day. Canada, the markets were closed, but in the U.S., they were open on a very mild day, basically nothing day. Okay, market finished flat. So we're still in a bullish mode. We're still trading above the 50-day moving average, as you can see here in red. So everything here checks out the bullish boxes, technically speaking. And if we look at the sentiment as well, we are still very low, neutral to greed. Nothing really happened. This is like the first time that we are in greed. Like three times we were in greed. In the past 3 days, we were in greed, but only on the 23rd did we get into greed. The other two were like basically on the border. So as you can see, we're in greed in some spaces here, but neutral and extreme fear in the put call options, okay? People are still buying puts. I don't get it. But anyways, this is very good for the bullish camp. Greed is good. We expect to see this more going forward, okay? We're still not there yet. And we had the AAII Investor Sentiment Survey, which I like. And look, it increased the bears and decreased the bulls. Basically, the bulls are at 37.4%, which is average. This is not extreme bullishness or greed that we're seeing. In fact, the bears are still lingering higher than the average. We're at highs and the bears are higher than the average. This is fuel for the next move up. Okay, I'm convinced that this market will continue to go forward at least for 1 month into the new year, and we'll just say for the whole quarter of the new year. That is my base case. Okay, so let's get to the big news: silver squeeze. Okay, this is critical to understand because we are seeing silver making a crazy move today. Okay, up 10%. Okay, and it's been going up the whole time. So what is going on here? It's not just silver. We'll get to the other metals soon, but silver, there's a particular case here because you know from months of following me that I think that silver is the critical metal in the world. It is more important than anything else in terms of strategic metals, and Trump's onshoring of critical metals should have silver at the top of the list because it is involved in everything from electronics, iPhones, cell plans, cellular phones, what would you call it? The green revolution with solar panels. You have it in automobiles. You have it in everything. Okay, computer tech, even military. So it's the most critical metal, and it's in pretty rare. It's in short supply. So this is why this is happening. This is more important. Like right now, it's trading at $79 an ounce. Okay, it's a huge move. Okay, and the reason it made this move is because the big news is that over in China, okay, silver supply tightening in China. As you guys know, if you've been following that, the market right now, the precious metals markets are being dictated by China and not the US, not the COMEX or the LBMA. Okay, it's not in London, it's not in New York, it's in China that is setting the price. And China's silver supply is tightening, a strategic investment opportunity amid backwardation and export-driven market shifts. What does that mean? Okay, let's go here for the summary. China's 2025 silver metal market faces severe backwardation due to record low Shanghai Futures Exchange inventories. 531,211 kilos of silver inventory sounds like a lot. It's huge, but it's very, very low. Okay, I think it's as low. It hasn't been lower. Like you have to go back to 2015, 2016 to see these levels. So in Shanghai, the metal is at critically low levels. It's leaving. Okay, and why? Why is this? Because, well, again, there's a global resource war. They need this metal, okay, for industrial demand like photovoltaics. It says it right here. Industrial demand from photovoltaics and gold to silver shifts are straining the supply chains. Okay, so you have these figures going on, these dramatic changes happening at. This was in December 20, the 24th, which was on New Year's Eve on Wednesday, but it's exacerbated today. Okay, and what do we mean here by China's silver market is in severe backwardation? What does this mean? Well, this is a little chart of what backwardation and contango are. Okay, normally in a futures market here, if you look at the left, you see the short-term futures price, or the one that's going to expire in the near term, is lower than the prices that will expire in the future. Okay, and that's because, like, if you buy something now, like silver or any commodity, you will have to store it, which costs money. You will have to insure it, which costs money. You will have to finance it, which costs money. So all of these things are called carrying costs, and they have to be reflected in the futures price. Because if I buy something now and I have to carry it for like a year or two, the cost should be higher going forward. So the price in a normal functioning market should have futures prices higher than the near-term futures price, or even the spot price, okay, because of these carrying costs. What we have now, this is the normal state of events right here. It's called contango. But what we have now is backwardation, where the short-term futures price is actually higher than the farther-term futures price, okay? This is because people who want silver, physical silver right now, are willing to pay a premium. They don't care about the carrying cost. They're willing to take a loss because they need the silver now. This is more important for their business, like, we just talked about photovoltaic cells or a car company. They want the silver now, and because it's in short supply, they're worried that they might not have it in the future. So they're willing to pay a premium now, carry it themselves, and take a loss because they don't want to shut down their business. So they would rather pay more for silver now because it's in short supply, rather than shut down their factories and having to fire people. Okay, so this is what they mean by the backwardation is in severe backwardation. That means this price is much higher than the rest, than the future prices. Okay, this is very important to understand, and we can see here in the next chart the Shanghai silver prices priced in dollars, okay, versus the silver price in the U.S. As you can see, the blue line here is the Shanghai exchange price marked in dollars, because in Shanghai the contract is marked in renminbi per kilo, where here in the West it's in US dollars an ounce. But they're converting it to US dollars an ounce here. And as you can see, the blue line is in Shanghai, China, and the gray line is the Western price. And as you can see, for the most recent day here on the 26th, the Shanghai price is $81.99 or $82 an ounce. But in the COMEX, it's trading at $74.79. That's literally a $7 spread. That shouldn't happen. Okay, this is an arbitrage opportunity to take advantage of. Okay, like they mentioned here in the last part of this article that we were talking about, strategic opportunities include backwardation arbitrage, meaning that if I was a trader, I would buy it in New York in the COMEX at $74.79, buy shipping, buy insurance, and ship it all the way to the Chinese warehouse and make a 10% return. Okay, the shipping and whatever will not cost me $7. It might cost me, all that stuff might cost me $1 or $2, and therefore I can make, instead of $7, I'll make $5 an ounce, which is unbelievable profit if I was a metals dealer. Okay, but why isn't this happening? This gap should have been covered. So you have to ask yourself, why isn't this gap, this $7 gap, covered? Okay, well, that's because if I go into the Western exchanges here, like the silver on COMEX here, the SI is the silver futures price in the COMEX, you would see that it's trading at $79. The futures price, okay, the near-term contract. Why couldn't I buy it and sell it for, well, the future, that was the spot price. In Shanghai, the futures price would be, let's see what it is in silver futures. It's tough to see it here. Right here, silver futures in Shanghai, it's at $91.44. Okay, that's like an $85 an ounce price. Okay, so in Shanghai, it's trading at $19,144 a kilo, okay, which is the equivalent of, like, let's say $85. But the silver futures in the COMEX is trading at 79. So another $6 spread. Okay, this should not happen. And this spread, like this chart is showing, is continuing. Okay, it's so like here they're looking at the spot prices, whereas before we looked at the futures price, they're a little bit higher. But it's still, the gap is still the same, and it should not persist. So why is it persisting? Well, we can speculate, but probably because if we buy it in the COMEX, we want delivery. We expect delivery. And the COMEX might not give it to you, might not have it available for delivery. So that gap might not be able to close, because first you have to have delivery. As a trader, I want to buy it in the COMEX so I could have it in my account, the actual silver, so I could ship it on a ship and send it to Shanghai. Okay, but that's not happening right now. And the fact that it's not happening means that traders cannot source physical silver in the West, in the COMEX or in the LBMA vaults, okay, with London. So this is why this gap is persisting, and this is why, like, you still have record shorts, like inventories, like we saw here. The inventory, record low. Shanghai inventories, 531,000 kilos. Okay, that should be going up as the metal is going into the vaults. Like, the higher the price, if in a well-functioning market, the higher the price means that the inventory should be rising as traders are taking advantage of this arbitrage. But the arbitrage is not being arbitraged away, I guess. So the spread is still not being arbitraged. So this is why you have these moves going higher, and I think this is why this will continue to go higher. It might solve, I don't know. It might not solve. There might be, like, this is why I mentioned in my Twitter that this is like the GameStop. Remember when GameStop, let's go to the monthly chart of GameStop. Remember when GameStop had this spike? It happened very quickly. It happened literally, you see these moves here in GameStop going up here for a couple of months. And then the big month, it went from post-adjustment from $5 to 120, but this was because it split. Okay, so we have this huge monthly move where, the shorts got squeezed and had to cover. Silver is different. It's not like GameStop. Okay, it's an actual commodity that needs to be sourced. So this monthly chart, you can look at this in 1 month. It's crazy. Okay, when will it get solved? Nobody knows, and I think it's going to be much more difficult to solve because there's a physical, actual demand from guys who need it. Companies need it. Okay, that's why it's the most critical metal on the planet for industrial purposes, but military, everything, and precious metals. It's like all in one right now. So the world is focused on the silver market, and I'm holding. You should hold. I don't think it's gonna resolve unless we have some kind of real blow-off move, and then we'll find out. Okay, but until then, I'm holding. And so should you if you're long. So let's recap. SPY, very short, nothing day, pretty much flat. But the big use is the silver squeeze, of course. But you also see it not just in this metal, you see it in everything. You see it in copper too. Even copper is going up. Look, approaching the highs of the Trump tariff hoarding. Okay, this was a fake. Long-term bullish on copper. It's happening everywhere. Gold too, even. Okay, gold had that breakout. I expect a similar move in gold. So you're seeing it in all the metals. So keep a lookout for that. I think it's going to become even crazier in the weeks and in the new year coming forward. So that's it, guys. If you like what you see, like and subscribe, and of course leave a comment below and I will answer it as soon as possible. Looking forward to next week, where it might be muted on the market. We might get like a slow drift up, but I think the silver squeeze and the metal squeeze is going to be longer lasting. Later.